What a powerful day it's been for the bulls after a very, very long time. Let's take a look at some individual stocks that are catching the limelight today. Starting first with aviation companies. Aviation stocks are in focus because the expectation is that there might be some tweaking on taxation that could bring at least partial relief to these companies. Sonia has all the details. Sonia, do explain this to us.
Well, sources indicate that the government is looking to cut the excise duty on ATF. Now, currently the excise duty on ATF stands at 14%. There is an expectation that that will be brought down to 12%. So a 2% minor relief is what the street is looking at. The expectation is it would be about 1,500 rupees per kiloliter. Currently, ATF prices stand at about 74,000 rupees in Delhi, and a 1,500 rupees per kiloliter amounts to just a 2% relief. We did reach out to some of the industry participants, and Jet Airways indicated to us that if this 2% cut comes about, then their fuel costs will go down by about 150 crores per annum. If you look at their market share and you take the entire industry, that would mean about an 850 crore per annum industry relief, which is not too much, but anything is good for the industry at this point in time, and that's the reason you're seeing a bit of a relief. The industry wants the numbers to go down from 14 to 8% eventually, because remember, way back in 2014 when Brent prices had fallen all the way to $36 a barrel, the government had raised the excise duty from 8 to 14%. So now, since Brent is so high, the industry wants the rate to be brought down from 14 all the way to 8%. But for now, I think it will be only brought down to 12%.
Okay, Sonia, so relief for the airline companies as well as consumers. Airfares have shot through the roof, especially when you're entering into the holiday season. But let's now go across to Ekta. She's going to tell us a little more on Dr. Reddy's. Ekta?
Well, there is some amount of uncertainty with regards to Dr. Reddy's, because remember that there was that big Suboxone hearing on the appeal that Dr. Reddy's had filed for this particular drug in the US courts. Now, that was expected to take place in the first week of October. It has taken place. In fact, that particular hearing by a 3-judge bench was completed on the 4th of October. But there is still no verdict with regards to this particular appeal that took place. So according to most of the people that I've spoken to, such cases generally take around 1 to 2 months in terms of a final verdict to come through, and hence it would probably be a little more uncertainty for Dr. Reddy's with regards to their appeal on this particular drug. Just to give you a background, Suboxone was launched. It's an anti-drug addiction drug in the US markets. It was launched at risk in the US markets in June. That means that they received approval from the US FDA, but there was still a pending litigation with the innovator at that point in time. So eventually the US court put an injunction on Dr. Reddy's, and they had to withdraw Suboxone from the US markets. Lucrative drug for them, but it seems as though it's probably going to be more of a waiting period and uncertainty on what the final outcome could be.
Okay, all right, that's noted. Thank you, Ekta, for getting us the details on Dr. Reddy's and Suboxone. Let's move on to what is a bit of a respite for automakers, particularly two-wheeler makers. Insurance regulator IRDA has confirmed that it received concerns from stakeholders on the personal accident policy. Providing clarification on the same, IRDA has said that insurers will have to provide both one-year as well as long-term personal accident policies to customers. So basically, long-term policies won't be mandatory. Let's listen in to what Vishnu Mathur, DG of SIAM, the Society of Indian Automobile Manufacturers, had to say on this development, which is a relief for automakers.
We had gone and spoken to IRDAI, and I'm very thankful to IRDAI for very quickly understanding the issue and issuing this clarification yesterday. So now the personal accident will be at the choice of the customer, whether he would like to take a 1 year or a long term, which is really going to make an impact on a positive impact. And I think when the festival season is beginning from today, I think it is going to have a positive impact. There would have definitely been some postponement in purchases because people would have expected that the things would get sorted out as we go along. I think the festive season is always something that we look forward to for higher sales. And if you look at the last 10 days, it was a sharp period and other periods. So I think the sale was slow in the last 10 days.
Okay, all right. That is the story as far as IRDA and the personal accident cover is concerned. Well, let's move on. There are several stocks that are in the focus on the back of buybacks, actually. A couple of them are PSU names, and it seems they're offering their cash to shareholders. Anisha, what's more on this?
Well, it's second half of year, and you can hear all these PSUs talking about buybacks. You can assume who are the promoters and who will be getting most of this pie of the buyback money. But nonetheless, let me start with the stocks that are bouncing on back of this buyback news. First up on NLC India, wherein the board has approved a buyback of around 1,250 crores. This has been done at a price of around 88, and that's why you saw a sudden spike in the price in the morning itself. It's up around 10% today. The government holds around 84% stake in the company, and they have said that they are looking to participate in this particular buyback. Now remember, why this raises question is because NLC India already has a debt of around 8,800 crores. Yes, the debt equity is limited to around 0.67 times, but nonetheless they are paying an annual interest of around 850 crores. They also have a capex plan wherein they'll have to invest 3,000 crore worth of equity over the next 3 to 6 years. They have recently announced this JV with Coal India as well as they're talking about expanding their power as well as mining business. And they are expecting a return of 15 to 16% on those businesses. And hence the question whether it makes sense to, return back the equity. Of course, on a generic basis, the cost of equity is higher than debt. But nonetheless, the cash generation, etc. also needs to be taken care. NHPC, wherein we are getting into reports wherein the government is looking to meet NHPC management to discuss the buyback plan. Now, this is important as well because the cash on the book is around 3,000 odd crores. But a lot of these projects of NHPC are stranded, whether because of some needs or working capital issues, and hence doing a buyback at this time really raises the question. NALCO as well, now they are holding a board meet on 12th October wherein they will be discussing the buyback plan. Well, NALCO is, kind of best suited in terms of the balance sheet strength. They do not have much exposure in terms of interest costs or finance, but they also have quite a bit of capex plan lined up. They're looking at increasing their bauxite mining capacity. They're looking at improving their coal mining as well as alumina refinery expansion. In fact, last year they had done a capex of 1,000 crores, and going forward is expected it can be at the run rate of 1,100 odd crores. We had seen that in case of BEL as well. In January, they had announced this buyback wherein the government was able to mop up around 200-300 crores. Remember, for BEL as well, a lot of big orders are coming, and the management has been talking how they'll have to invest more into technology. So all these buybacks coming in really just raises a bit of question whether it is more prudent for the company to put it back into the business or maybe buying in some equity.
Okay, thank you very much for that, Anisha. It will definitely help the government meet its challenging fiscal deficit target. But Anisha, stay on. HEG and Graphite India, brokerage thumbs up?
Oh, well, yes, they have been the darling stock for all these brokerages, and we have seen a huge amount of run-up in the stock prices. And even in the correction that we have seen in the last month, these stocks haven't seen that much of a correction versus the rest of the mid-cap space. Now, today, BofA Hamel has actually initiated coverage on both HEG and Graphite India. They talk about the same things in the sense how the graphite prices have gone up 5 times in the last year, how the changes in the Chinese regulation have really opened up the graphite electrode market. They talk about how these companies are going to see a sustainable growth run rate in the next coming 5 to 10 years, how the dividend yield is expected to improve, as well as the fact that the capex requirement is less, the cash generation is strong, and despite having all these murmurs regarding, the pollution control board and having the shutdown temporarily at the Bangalore unit for Graphite India, how overall the valuations are still very reasonable, and in fact, as per them, both of these stocks can be doubler because the upside that they have given for the stock is anywhere between 96 to 110%.
Okay, all right. Thanks very much. Yes, these stocks have largely moved one direction in the last several months, and that is on the way up. Well, here's a quick recap of our top 10 stock list. We've got Jet Airways on that list, Interglobe Aviation, SpiceJet, all those stocks higher. Hopes and expectations of some relief on taxation. Dr. Reddy's is also on the list on the upside. Bajaj Auto, Hero MotoCorp, Eicher Motors, Maruti, all the auto stocks benefiting from the changes in the personal accident cover. NLC, NHPC, NALCO, BEL, HEG, and finally Graphite India. So it's an all-green list today, like the market, Reema.
Absolutely, and like you.